This is Matthew Kratter from Trader University, and today I want to answer the question, what's so bad about ETH being a security? And instead of ETH, you can insert your favorite altcoin, Cardano, XRP, Solana, whatever you want to talk about. And the question is, if these projects, if these cryptos are eventually forced to register with the SEC in the US as securities, is this really such a bad thing? Now, I want to start by saying I'm not a fan of the SEC. They've done a lot of stupid things. They have not protected investors in the same way that they should have. They've allowed, for example, triple leverage inverse commodity ETFs, like some of these crude oil ETFs, to register. And then they come out and say that a spot Bitcoin ETF is too risky for retail investors. But as I've said many times on this channel, the enemy of my enemy is my friend. I would prefer a world without an SEC, or I would prefer a world with a much more competent SEC. But for now, we do have the SEC that we have. And the last time that I checked, they were still regulating some stuff. So given that we're not going to be able to get rid of the SEC for a while, I think it's great if the SEC wants to sue Ripple. I hope they sue Cardano. I hope they sue Ethereum. I hope they sue Solana. I hope they sue all of these projects. And that would be actually one of the few good things that my tax dollars could go towards. Again, Bitcoin is the only major digital asset that is a digital commodity. It's an asset without an issuer. And if you're an asset with an issuer, if you're an asset with an issuer like XRP or Cardano or ETH, it means that you're a security and you need to register with the SEC. This is how modern US securities regulation works. I would go a step further and I would say that the SEC should also sue Coinbase, Gemini, Kraken, Binance, all of these other crypto casinos for allowing these unregistered securities to be traded on their platforms in the US. Now, the premise of this video is that lots of altcoiners in my comment section do not seem to be particularly concerned about SEC registration for their favorite shitcoin or altcoin. They're always like, lol, we'll just pay the fine, we'll move on, what's the big deal? And I would say, not so fast, my friends. Here's a question from Earth Linguist, non-sarcastic remark. What's so bad about ETH being a security besides a potential fine for the violation? Another question, Captain Obvious 49. Could you possibly speak on what will actually happen when a proof of stake coins are regulated like securities? I think holders of these altcoins, these shitcoins, are vastly underestimating the risks to their projects posed by having to being forced to register with the SEC. So let's just begin with the elephant in the room, which we've been hammering home really for the past 18 months. Altcoins are nothing special. They're just a form of regulatory arbitrage. They serve no other purpose except to evade existing securities laws. Altcoins are just tokens issued by unregistered software companies that are pretending not to be companies, and maybe they do their ICO in Japan or Switzerland to try to pretend and get around US securities law. But if you're going to offer your tokens in the US, you have to comply with US securities law. If you want to start a new software company, for example, you need lots of lawyers and paperwork, and it's a bit of work. If you want to launch a new crypto, you just need a few devs and a good marketing team. This is really the difference, and this is why people choose to launch these projects as cryptocurrency protocols rather than as software companies. VCs and other institutional investors really like these projects because they can fund these projects and then they can turn around and dump them on retail investors in just a few months or a few years. And many of you have learned this lesson the hard way over the past 12 months. It was approximately 1 year ago that I made this video about how Solana billionaire VCs are laughing at you and getting ready to dump on you. And this was very close to the highs in Solana. And we've seen that they presumably have dumped on everyone since then. By contrast, most venture capital investments, most VC investments require an acquisition or an IPO to give those institutional investors, to give the VC fund and its manager liquidity. And this is another way of saying allowing them to exit so they can return the capital plus profits to their investors that are invested in their VC fund. Now, as part of an IPO, the company has to make a lot of disclosures. This can take years and years and years, usually takes 5 or 10 years from funding for a company to IPO, and is becoming less and less common over the past 10 years. So if you're going to launch an IPO, if you're going to take your company public in order to get liquidity, it's actually a lot of work. You have to make a lot of disclosures about the prospects of your project, of your company and the risks. And that's what we're going to talk about now. But before I cover that, if you're finding this video helpful so far, please do hit that subscribe button to help support the channel. So what happens before an IPO? What does a company like Coinbase do when they've decided to go public? They file something that's called an S-1 with the SEC. This is a registration statement, and it contains a huge amount of information. I don't know how many hundreds of pages this is. I will link to it in the description notes below, though, so you can scroll down. And it usually has some marketing propaganda at the beginning, but then they get down into the table of contents, and we'll see things like risk factors, principal and registered, stockholders, related party transactions. You can find all of these pieces in the same document: relationships, related party transactions, and especially who owns what. Brian Armstrong, at the time of the S-1 filing for Coinbase, owned 2.7 million shares, which was approximately 11% of the total shares. So this is what needs to be disclosed when you register with the SEC, and presumably something similar would be required for crypto projects registering with the SEC. Now imagine Ethereum having to publish all of these disclosures about itself. And remember, if they lie about any of them, the board of directors and the executives would be responsible for that, and they would be risking jail time if they did not disclose. And so when you read one of these S1s, you will find the whole laundry, the whole sink, and everything has been dumped in there by the lawyers. One of the risks for the Coinbase IPO was the return of Satoshi Nakamoto. I believe that was documented in there. So you basically put every disclosure in there that you can in order not to get in trouble down the road. And if you don't disclose something that's material, you really are risking jail time. So what are some possible disclosures that Ethereum or Cardano or any of these companies would need to make if they were forced to register with the SEC? They would need to disclose, for example, how much ETH Joe Lubin and Vitalik each own and other founders own. What are related party transactions among the ETH founders? Have they loaned each other money or loaned out Ethereum to each other? Insider selling would need to be disclosed publicly and transparently, and could only happen during certain windows. Tell us more. These disclosures would have to tell us more about Joe Lubin's control of MetaMask and Infura through his company Consensus, and other key parts of the Ethereum infrastructure. What are the conflicts of interest there? This would all be made very manifest. All significant material information about Ethereum, its prospects, its risks would need to be disclosed. And I can guarantee you that there are a lot of skeletons in this closet, and these would all need to be released to the public and disclosed. The question then is, will institutional investors still want to maintain their large ETH positions after reading these disclosures? And I would guess almost certainly not. These institutional investors themselves have a fiduciary duty to their own investors not to invest in scammy things or questionable things, or they can get sued themselves. And after the FTX blow up, you can be sure that institutional investors are going to press the sell button first and ask questions later. So if Ethereum had to file an S1, there would definitely be a mad rush to the exits as people sold off the token in advance of the filing, or immediately after the filing when they saw all of the atrocious stuff that is in the disclosures. Again, ETH today in November of 2022 is mostly attractive to large investors simply as a workaround to existing securities regulation. And if you want to do software that has smart contracts, for example, you could just register as a software company and do the same thing. But ETH has taken this particular approach because they wanted to have a huge pre-mine, and they wanted to maintain all this insider control, and they wanted to basically print up free money for themselves. So ETH as a regulatory arbitrage, as a workaround to existing securities regulation, that's why VCs, venture capitalists, and other institutional investors like these kind of altcoins. If these altcoins are just securities registered with the SEC, like a Google or an Apple or Netflix or PayPal, then you might happen to read the Ethereum S1 and decide that you like some other tech stock more. If you're choosing between software companies, I imagine that Ethereum would actually not be that great when you get down to it. It's more that it's a workaround around existing securities laws. So after you read the Ethereum S1, I imagine a lot of institutional investors will decide to dump their ETH and maybe buy another registered security like Apple or Google or Amazon instead. And at this point, once they're all registered as securities, Cardano, XRP, ETH, Solana, they're all going to have to compete with the existing universe of tech stocks. There's going to be nothing special about them. And in the process, they're probably going to lose. So what are the conclusions? If your altcoin ends up having to register with the SEC, I believe that things are going to get ugly quite quickly. And it's not just going to be about having to pay a fine for violating securities law for the past few years. You're going to have to make these material disclosures that are going to actively undermine the credibility of the project, because these projects are not credible to begin with. By contrast, Bitcoin is an asset without an issuer. It's a digital commodity. There's no corporation behind it. There's no CEO. There's no CFO. There's no founder in charge. There are no headquarters. There's no foundation. There's no dev team that does a new hard fork every few months like you have with, for example, Monero. And even if Bitcoin were forced to register with the CFTC in the US, this wouldn't change anything because everything is transparent. There's no foundation. There's no group like Vitalik and his buddies running things. It would be the same way that, for example, crude oil or corn or wheat registers with the CFTC. They'd basically be like, we have this digital commodity. It has produces blocks every 10 minutes, and it has this various supply schedule, and here's the open source code, blah, blah, blah. There would be nothing needing to be disclosed that wasn't disclosed already. And it would be a much simpler process. Basically, Bitcoin is already so transparent that none of this would need to be, there's really nothing that needs to be disclosed in addition. So for example, when crude oil registers with the CFTC so that people can trade futures on it, it's not required to disclose who holds all the crude oil in the world. Obviously, there's crude oil everywhere. There's some very large holders of it. There's some countries that produce a lot of it, but this is not part of CFTC disclosures in the same way that insider ownership and control is part of the disclosures when you file an S1 with the SEC. So this would be very, very bad news, and I believe will be bad news for altcoins. This is why Bitcoin is special. This is why Bitcoin stands apart from the pack. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.